As we are talking about the patterns now, and we know that the patterns could fail. Of course, eventually we want to our pattern to succeed, and that has to be ideal case. But we have to minimize our risk as well. Okay, so we can minimize our risk by applying a stop loss to our system. So let us understand what is stop loss and why it is important, how we can get perfect at placing a stop loss. Before that, let us understand why people lose money in the stock market. Okay, uh, we discussed that 90% of the people lose money in the stock market. Okay, but that being said, people lose money because of lack of knowledge. Okay, if my numbers are correct, I think 75 to 93%, not daily, but this is quite a range. These are the number of trades placed by the computers. So this is the algo trading or the automatic trades that are happening in NSE as of today. Okay, now imagine the amount of money strong hands have. We are just a retailer, and we are just trading with, let's say, small capital of, let's say, 1 lakh, 10 lakh, or 1 CR or 2 CR. This is a relatively very small numbers for markets. While that being said, if 90% people are losing money, isn't that a big opportunity to remaining 10% to make more money? Okay, so now we need to choose, we need to be on which sides, whether we want to be 90% losing money or 10% making the money. Okay, so with the proper system, what we can do is we can minimize the amount of loss we make on each trade. Okay, and we need to maximize the amount of profit that we can make on each trade. Okay, to achieve that, stop loss is very important. Okay, so stop loss is like a brake that we have in our cars. Okay, so when we learn about driving cars, okay, so what is the most important thing, if somebody asks me? So I think the most important thing is the brake. Okay, so because if you want to drive long every day throughout your life, you need to have control on your car, especially in terms of brake, because that is something that it is going to stop from getting into an accident. Okay, so driving could be easy, but knowing how to control your car, where to stop, where to start, so that is something important. Similarly, in the market, stop loss is very important. So we should be aware that what should be the level I should be booking my loss. Okay, so our goal in the stock market is to, you know, our goal is to make money. But at the same time, most important thing is to reduce the loss, because once the loss happens, we are losing our capital. Okay, so after every loss, we are losing our capital. And when we lose our capital, we are losing our buying power in the stock market. Okay, so very important line that we all should remember: if there is no capital, then there is no capital markets for us. Okay, so 100 rupees as a capital can eventually give us 110 rupees with the profit of 10%. But if we lose 50% of that, that is, if we come to 50%, okay, there are very less and less chance to reach to 110. Okay, so preserving capital is most important factor of stock market, and that will be achieved with the help of stop loss. So what is stop loss and where to set it? So we exit the position when the trend does not go the way you want. Okay, so we were assuming that the trend is going to go up, but it is going down, so we have to cut down our position somewhere. Okay, so when you specially buy on a breakout, there would be profit booking in consecutive days. Why? So let's say this is the resistance level and there is a huge breakout. Okay, now we are not the only one who bought at this level. So there could be intraday traders who will want to book their profits. Maybe there could be a BTST trader that is buy today, sell tomorrow. He'll be selling tomorrow. There would be positional trader who maybe bought here and he wants that the breakout has come now, the price would come down, so he will exit your position. So there would be a selling pressure in terms of breakout happens. Okay, the reverse is also true. Once breakout confirms, the positional trader who wanted to buy into this certain position, they know that there would be selling coming in, so they start buying those stocks, especially the institutional traders or strong hands, or people with a lot of capital. They will also start buying here because they are hardly bothered about this 5% correction that is going to happen. They know that in the stock is eventually go up in a couple of months, so they'll take hit temporary, sit on notional loss for long, I think for couple of weeks or a couple of months, and eventually, because of their buying, heavy buying over here, even in this downfall, okay, there would be a small correction, or there would be again a continuation of the larger uptrend that was here. Okay, but when these strong players are going to exit their positions, okay, there would be a very strong selling in terms of very short time span. So that is why we will require a stop loss somewhere here. So when you buy on a breakout, a stop loss would be wider and it will carry more risk. Okay. So again, let's say you have a moving average, and your moving average has a value of, let's say, 50 rupees, and your stock comes here and gives a very strong breakout. Okay. Now the stock price is sitting at 75 rupees. Now from 75, your moving average is to 50 rupees. So ideally we should be buying somewhere here to minimize to keep our stop loss levels to as close as possible. Okay. So that is why the strategy that we suggest is to buy in weakness, okay, and sell in euphoria. So euphoria is somewhere here when the candles are big, volumes are high, we should exit here. Okay. There are different strategies in terms of trading, how to trade, but the importance of stop loss is really important. And the moment we take the trade, we should know that what should be my stop loss level. So let's say even if you're buying at 75, so we cannot keep moving average as the stop loss. So maybe we can just keep some random stop loss of, let's say, 2% or 3%. Okay. So maybe you can keep a stop loss of 70 rupees and exit the trade if it is going to correct very sharply. Okay. So with that, risk of minus 5 points is okay, but we can avoid risk of minus 20 points. Okay. And then maybe try to buy stocks at 53 or 54. Okay, because your moving average will be going up after every trade, and you can then buy. So what we are doing is we are reducing risk of minus 20. Now why this is important, let us say if is even after you sit on the notional loss of minus 25, okay, and the stock breaches moving average and it continues its downward journey, and that is how we get trapped into a pattern, so into a certain trade. So from minus 25 it will go to minus 30, then minus 50, and so on. Okay, and it will eventually come to a point where we cannot really book our losses anymore. And this is a classic situation that we should always avoid. We should not be in these kind of situations. So always remember, in case you're not able to find a support level or a moving average as a strong support to exit out of a trade, let's say your stock price is at very high level, okay, then at least keep some stop loss at minus 2% level or minus 3% level. Okay. And this minus 2% or 3% can be any value, as long as you're comfortable with that. In certain cases, my stop loss is very tight. So let's say if I buy stock at 136, okay, so 135 will be my stop loss level. Okay, because I'm buying this one on breakout level, so I have to be very careful because downside would be very strong. Okay, so what I'll do, I'll buy at 136 and I'll keep 135 as a stop loss level. In some cases, when I'm buying in weakness, when my buying is as close as 50-day moving average, okay, so let's say at 500 is the moving average of 50 SMA, and current market price is, let's say, 101. Okay, so in this case I can easily keep a stop loss of 490 or so. because I know that there are very rare chances that the stock price is going to go below 50-day moving average, that is 500 rupees. Okay, so this depends case to case, but especially if there is a euphoria and more and more people are joining, we need to be very certain about stop loss, because if a very strong player comes in the euphoria to sell his equity, he'll be selling lakhs of shares, and it's very high chances that it will wipe off your capital very fast. And if the stop loss hits, okay, ideally you should exit. Okay, so we have tendency of averaging at a particular price point. Okay, so important is that do not average but exit. Why? Because let's say the stock was going up like this. Okay, and let's say current market price or your buying price is, let's say, 100 rupees. Okay, and you have kept a stop loss of 95 rupees. Okay, it goes here. Okay, now you kept 95 as the stop loss. There was a reason for it, right? You took the risk of 5%. Okay, your stop loss is hit. Now what would be the next step? So from 95 there are very high chances that it will go down. Okay, because your study has been invalidated by the stock movement. Okay, so there is something else that has happened which we did not anticipated. Okay, so you exit first, then analyze what has gone wrong in the study. Okay, it's all right. Now from 95, let's say the price reverses, goes to 110. That is all right. Okay, why? Because your original buying was 100 rupees. From 100 it has gone to 110, let's say increase of 5%. Okay, but from this 5%, when it comes down from 95 to 100, is a quite big rally for this stock to make. Almost 10 or 11% it has to rise up. Okay, now rising from 100 to 110 is relatively easy than rising from 95 to 110. Okay, so that is the reason when your stop loss is by the system, you should ideally exit. Okay, because there are less number of chances that the stock is going to go up. Okay, again, your stop loss has to be system based. There has to be some reason for that to be a price point to exit. It cannot be just a random price point. But ideally when you prepare a stop loss, it has to be exit level. Now there is a case wherein you can avoid or you can average. That is, you have already decided that I'll be going to buy this stock in steps. Or let's say, if you take this example, let's say the breakout came, you just added, let's say you wanted to add 100 shares, let's say you wanted to add 300 shares, you bought 100 here and you missed out, your order did not got executed, and the stock went up significantly. Now you're sitting on capital, you wanted to buy this stock, your targets are much higher. Okay, let's say your target was 20% up from this level and the stock has risen up by, let's say, 5% only. Then you wait for correction. Okay, let's say it corrects to 90 rupees. Okay, or let's say from 100 rupees you buy that stock and you are expecting a breakout. Okay, so this would be a only case wherein you can average. Let's say it goes to 95, that the breakout is going to come, and it goes to 96, then 97, and it is consolidating. So eventually it is going to give a breakout. So at these levels maybe you can consider buying this stock. Okay, or you can averaging. So averaging should be ideally done in the stock movement of 1 to 3% only, the negative stock movement of 1 to 3%, especially when your stop loss is way below to, let's say, 5%. So it has to be calculated and only done. Otherwise, averaging should be also avoided. So there is something called as negative averaging and positive averaging, and we'll be discussing this in the upcoming slides. So again, what could be your stop losses? Your support levels. The when stop loss goes below support level, we should exit. When it goes below moving averages, we can exit. Again, the volumes has to be supported. Volume should support that. In any case, do not extend your stop loss more than 10%. Okay. Now there's a reason for this. Again, something that we'll be discussing in very detail. But in case you're not able to follow anything, you think that your studies are going terribly wrong. If your stock is sitting in minus 10%, exit that position. Okay. Reasons will always come later, because when a stock is giving a negative move of 10% in a very short period of time, so there is no buying interest, there is selling. The reason is bear cartel, or bears know some information which is not available to us. There is something terribly going wrong with the company, which will come out in the the next result season. So that is the reason, when just keep a very simple or blunt rule of minus 10%, because we want to save the capital and because we want to trade in better stocks. Just remember, when the stock goes minus 10%, exit. Okay. All right. And why, in case of stop loss, why moving averages are important? Okay. Calculating, because I said that, I just mentioned that, there are a lot of algo trading that happens in NSE. The computer are doing basically the trading on daily basis. So calculating, different support levels is relatively difficult to computers. Okay. But calculating moving average is very easy. Okay. So maximum support levels are usually maintained by computer trades on moving averages. Okay. And or what they can do is they can just calculate these previous highs and lows. Okay. And those would be their stop losses. So as long as the price is being traded in these levels, they'll keep on buying and selling. Okay. And they will completely exit their position when a certain price level is breached, either this one or this one. Okay. Maximum support levels in the computers can check is all-time high and lows, or 52 week high and lows. So these are very easy for them to calculate, because those are stored points. Okay. So let's say stock has made a high like this. Okay. And it has corrected. And now next time when it is going to come, so this would be a clear-cut support from them. Okay. And this would be another support level. So this is easy for computers to calculate. However, with latest technology, this is, I think, also can be overruled, that the most of the trades can still calculate easily the support and resistance. But most of the computer programs can easily calculate moving averages. So moving averages are much more important in terms of support and resistances. Always remember that we are not the only ones selling. So when we know that patterns are getting failed, or when the breakouts are coming, or a significant correction is going to happen, or when the current market price is going below a moving average, so in all this scenario, we are not the only one will have this information, right? Charts are available to everybody. So important thing is that what we see is also visible to everyone. Okay, always remember this. All charts, all feeds, everybody has same information: what people are buying, what people are selling, what price the stocks are trading. Everything is available to everybody. So just by learning the patterns, or just learning by volumes, may not make us a successful trader. So the basic guideline or basic important thing is to be prepared with plan, and we should be the first one to exit when the trade is not going in our favor. Obviously, we cannot be faster than computer, but like we have a certain stop loss, many traders will have similar stop loss, and at that particular price point there would be a lot of selling pressure. So what we should do, either we should place our orders in advance. Okay. We should be always avoid to be part of who exit first, because when that race begins, there would be less and less number of buyers, and we will eventually exit at much low level than we anticipated. So what we should do is we should sell on mild bounce back. Now how this can be done? Let's say this is a resistance level. You eventually were waiting for breakout came, but it is now correcting very rapidly. It breaks the support level as well. Now when stop goes like this, okay, there would be short covering and stock will start rising up like this. Okay. And at the previous support level, which will become the resistance now, we may try to exit here. Okay. And the stock will again go back down here. But again, as we know that, this same information is also visible to everyone, especially when primary trend or overall sentiments are negative. Don't wait for this correction. This might not come only. So stock might go and fall like this. Okay. So the reason, so especially I think we currently exited few positions wherein we did not wait for this move. Okay, the reason we did not wait for this move, the reason is chances of strong bounce back are lesser because the overall sentiment in the market is very negative. So if you're confident that the sentiment is relatively positive, and there would be a bounce back, maybe in those cases you can take this decision whether to exit immediately when the stop loss is reached. You can completely exit here, maybe you can exit here as well, or you can wait for a mild pullback and exit here. Okay, but at this level there would be more like us who want to exit, plus there would be short sellers as well, because they know that the price is not going to go above this. So there are different strategies in order to book our stop losses. We'll check those strategies in upcoming slides. But always remember, we should always sell in euphoria and buy in weakness. So as a retailer, this has been working well for me. In case we want to be sure that we minimize the loss and maximize the profit in terms of few percentages, we should always sell in euphoria and buy in weakness. That is when the stock is in consolidation and we know that in 1 or 2 days there would be a breakout that could come in. We should buy into that weakness. Okay, because buying in breakouts can sometimes be tricky, and with practice, of course, you can get better at it. But I think for initial stages, you can just remember these two things, that you should always try to buy weakness. It's okay that in initial phase we be part of the consolidation for a few days and eventually wait for the euphoria, but things would be little safer. Also, preferably sell in the morning, wherein the maximum participants are there. As prices are pulled back up to the sell at higher points. Now what do we mean by this is, let's say the correction happens, okay, and the stock closes somewhere here. So on the next day there would be many players who want to exit. So eventually what will happen, they'll bring those prices up, okay, and they will double sell over here. So what will happen, all their previous longs will be exited with lesser loss. Okay, they will create another short position. Okay, and the stock will eventually fall more, and they will make profit over here buying here. Okay, so what they did, they minimized their loss here. Okay, from this range they minimized their loss, plus they created a short position and became a part of this downfall and created additional profit. Okay, so that is how, and this can be only possible if you are able to create that position in the morning. Okay, so in case you have to make any sell decision, ideally you should be doing in the morning. But in case there is overall weakness, next day maybe they not be participating in the market, maybe they'll just simply sell their order in pre-market and decide not to be part of today's trade, and eventually the stock price will fall further. Okay, especially when your stops are when your trade is in positive. So let's say you created a position over here and your stock prices is going like this. So initially when you created this particular trade, let's say your stop loss was somewhere here. Okay, your buying position here. So this is your buy level and this is your stop loss level. The stock price has gone up now. So what we should be doing is, first step is to move your stop loss to your buy level. Okay, so let's say you bought at 100 rupees and 95 was your stop loss. Okay, what you should be doing is, once the stock reaches to, let's say, 110 rupees, okay, you are in now 10% profit and your stop loss was minus 5%. So this should become your stop loss. Okay, so 100 is now your stop loss. Now why we should trail? Okay, we are here to make profit. So we should not be sitting constantly on this being as your stop loss. Okay, we should be always keep moving your stop in the upward direction. So we are okay with large profit. Okay, so large profit is okay. Okay, we are okay with small profit. Okay, so let's say from 100 it goes to, it comes back to, let's say, 100 rupees. Okay, so we have ended with no profit, no loss, apart from the, of course, the brokerages and everything. But let's say we just ended at 100 rupees. Now let us assume that stock went to 120. You moved your stop loss to 110 from 100 now. So at least you'll take home these 10 rupees per stock. Okay, so we're okay with small profit. Okay, let's say this move did not happen and we ended at 95 rupees. Okay, so we are okay with small loss as well. What we should not be doing is, once your stop loss level is reached, stock reaches to 95, then it reaches to 90, then it reaches to 80. So we are not okay with this large loss. Okay, so all these three scenarios are in our cases. So this is, we are okay with this. Okay, so we should not be taking large loss. Okay, because that capital will be completely gone. So it is important to stay in profit always, and ensure that your trail does not end in a loss. So when you create a trade, so this has to be a very important point in our mind, that our trade should not end in a loss. Okay, in some illiquid stocks we might not be able to gauge an idea that the stock is going to quickly correct. So there are certain stocks, especially small caps, which correct. They have range of 10% in a day. They will go 5% up, 5% down in a day. That too, 10 or 15 seconds. So those kind of stocks are difficult to trade. But in mostly liquid stocks, you should be able to fairly take trading decisions, and there won't be any problem in terms of trading your stock stop loss upwards. Okay, and if anyways your stop loss is hit, we should exit immediately, and we should either try concentrating on the next trade always, rather than focusing on a weak trade that we're already in.